myself Vaibhav. In today's session of Visual JForex, we'll be starting afresh with the new indicator named percentage price oscillator PPO. This is you can say a variant of the MACD. If you are well familiar with the MACD, you might be knowing that the MACD considers the absolute difference between the given set of EMAs. In this indicator, the absolute difference is being replaced by a percentage difference. So we consider what is the price action and the EMA derived from that, and the change in two EMAs, the lower duration and the larger duration EMAs, or even if you want, you can take different types of moving average, but I'm speaking from the representative perspective. So the difference is being taken in the percentage format, and that's why this indicator is called percentage price oscillator. So we will see how we can design and develop the algorithm using the indicator to bring in profit. We head to the Visual JForex board, which has been developed by the Dukascopy Bank SA. This is the indicator block for the PPO. We have to define these 6 input parameters, depending on which we will get the one output value. For MACD, 3 output values are generated, but for PPO, only single output value is generated, and it gives us the idea whether the underlying momentum is bullish or bearish and how strong that momentum is. So that helps us in determining the optimum trading points for the execution of our trade. I will make you familiar with the functioning of this indicator and how we are going to define the logic for today's algorithm. This is the USD JPY chart being plotted on the hourly time horizon, hourly time period, and I have also added the PPO on the lower side. The combination is of 12, 26 SMAs. So here we are taking simple moving average, and the shorter term is of 12, and the longer SMA is of 26 candle periods, each of hourly time horizon. And the difference between these two SMAs is being plotted in the percentage format using this PPO block. So when we have two SMAs converging, then you will see that this PPO value starts to decline if it is in the bullish if it is in a bullish side, if it is above zero, and if two SMAs starts to converge, then this value goes on to decline. And if the underlying momentum has been bearish and the PPO has been in the bearish side, then it starts to rise whenever we have these SMAs converging. What we will do, we will take the price action and whenever we see that there is swift change and two SMEs are converging or moving apart quite swiftly in a in a shorter time period, then we will be looking to initiate the trade, as that might be signaling that price action is moving sharply, and that is going to be the appropriate time to get involved for any new trade opportunity. So the logic is going to be simple. We want the change in the PPO value over last 2 hours. So we will be taking the PPO output for last hour and the PPO output 3 hours back. So the time interval between these two candles is going to be of 2 hours. We will be taking the PPO blocks with the look back period of 1 and 3 respectively, and we will see the difference is as per our requirement whenever we want to initiate the trade. So the logic is simple. We will compare this value and the difference. Whenever we want to go for a buy trade, the difference should be at least more than 0.05%. The output is considered in percentage, and here afterwards I will not add percentage. I will simply say the absolute value, okay? But keep in mind that it is expressed in percentage terms. So the difference between the two output values for the PPO 2 hours apart should be more than 5 pips, and that will signal the underlying momentum picking up, and this will be the time we will be in a position to go for the new trade. And for any short sell trade, we want the PPO value for the last 3 hours to start converging, and this difference here also it should be in a declining phase, but the difference will need to be more than 0.05. And when we have the underlying momentum in the bearish phase, when the PPO output has been on the lower side, at such instances, we will be looking for the change in underlying momentum. So whenever we see that PPO starts to rise and it is picking up pace quite swiftly, whenever the difference is rising more than 0.05%, we will be looking to initiate the buy trade. And when we have this bearish phase also, and in this phase also we will need the PPO value to be more than 0.05% apart, and the last hour's PPO output value should be lower than the PPO output with the shift value of 3 more than 0.05. So at this instance, we will be looking to initiate the short sale trade. So when we have the PPO above 0 and rising, then also we will be looking to initiate the buy trade. When we have the PPO above 0, but it is now declining, but declining pretty swiftly, we will be looking to initiate the sell trade. When we have PPO output in negative territory and it is continuing to decline steeply, we will be still looking to initiate the sell trade. And the fourth scenario is going to be this: when we have the PPO output in negative territory, but it is reversing course and started to rise sharply. In such instances, the preference will be given to initiate the buy trade. So that's how this trading system is going to work. We will have four different scenarios depending on which we can go for the execution of the trade. So now we head back to the Visual JForex board, and here first thing first, I will have to add the if blocks. We will use on candle as our start point. Default variable, default instrument will be matched with on candle instrument. Here we will have to find the Euro USD. It's taking too much time. Okay, here it is. Position amount needs to be 0. Now coming to the PPO blocks, this will need to be of the hourly time period. Shift value of 1. This fast period and the slow period we will leave as per the default setup. No change will be carried out. And the MA type is going to be SMA, simple moving average. I will have to add one more of this block, PPO. Here the shift is going to be 3. Okay. So we will be relying on these two PPO blocks of the hourly time period, hourly candle period. And after that, we will shift our attention to the price action. We will take the cluster of 3 hourly candles, and we will use the price difference. We will define certain value which needs to be fulfilled. At least the difference between the high and the low should need to be beyond or more than that. So only in these circumstances we will be looking to execute the trade. I will have to add the component logical info and loop viewer along with this get historical candles. Candle amount I will change to 3 only. Candle period is going to be hourly. Current candle I will name it HLD. Okay, and after that we are going to need to add 2 more hourly get historical candle. So again going back to info component, First one is going to be of the hourly time period, and these two will be of 10 seconds each. We will be placing the order whenever price starts to rise above the last hour's closing value. So for that purpose, these three gate historical candle blocks have been added. We will also want to make sure that the closing for the last hourly candle, the candle 17, is higher than its opening value. This is going to have the shift value of 1. This also shift value 1, and in this case, loopback rate is going to be 2. So these are the basic building blocks for our algorithm, using which we will define the condition. And as the time is running short, we will wrap up the session here. And once we come back next time, we will add the conditions which will need to be in place for the execution of the trade. We will define the difference using the pip size of the default instrument, and the high and the low difference of these candle 15s HLD will need to be more than that, and also the last hourly candle should have closed with gains, and only in these circumstances we will be placing the order which is going to be placed on the lower side. It will be a pending order. We will not really be going into the market position. We will not be placing a market order at the current price. Rather than that, to optimize the entry and resultant stop loss and target price, we will take certain difference of these high and low, certain amount of the high and low, and place the order below the current price by that ratio. So this is all from my side for today's session. If any of you have any query or any idea to share, you can write to me in the feedback section, and I would be more than happy to take the discussion forward. Do check out the links provided, and if you have any problem or any difficulty installing the JForex platform or the Visual JForex platform, you can write to me in the feedback section, and I will try to resolve the matter. Thank you all. See you next time. Till then, goodbye.